Good weekend and Merry Christmas to all. I'm Ira Epstein, and here we are with your weekend edition of your financial market wrap-up. And this wrap-up is for Friday, the 22nd of December, 2023. Well, if you're like everybody else, you're going to go to Christmas, you're going to be feeling good, then the family arguments happen, and then who knows where you're at. I've learned I go for the meal, leave my wife, head back home. Never a problem. I'm not quite telling the truth, but I'm close, all right? It works better that way. So what about this week? Where are we? Well, the stock market finished mixed today. You've got the gold that was up and the silver lost quite a bit of ground to it. Now, is it a one-off or is it, this is that funny time where you're not quite certain what things mean? 200 million people traveling, air and car. How many are in the marketplace? How many aren't doing anything? It's easy to push the markets around. We'll get a little bit back to normal on Tuesday, Wednesday of next week. And then Thursday, we go through the same process again because we're not open a week from Monday. That's New Year's Day. And then everything gets back to normal. So you deal with what it is. You've either made your year or you haven't. Now, that's what trading's about. Trying to make this all up. Now, in the last 9 days of the year, it doesn't make any sense to me. Dollar bearish, but maybe getting a little overdone. I could see bounces coming in the marketplace. Grain market pretty stable right here. Bonds and those started off good, but they gave everything back up, but I'm going to repeat. You don't go too much by what today is offering you. Be very careful. A couple of things. I know a lot of you like to follow my subscriber videos. Well, you can subscribe right here if you're watching me on YouTube. Just look at the bottom right and you'll be able to click that area and subscribe. We'll get you in. I put out my morning subscriber videos these are about time, 6 a.m. Central Time, about 9:15, 9:20, 9:40. It's all over the board in the SPDR ETF. It depends how much information's coming out in government reports. On the SPDR ETFs, I like to wait for all the government reports, and they're typically over at 9 o'clock Chicago time. They don't always come out, though, that late. Some are done by 8 in the morning, and when they are, I can jump on at 8:30 as soon as the market opens. Remember, I'm in a Central Time, record the tape's out much easier. So it takes you time to shoot, then I have to render it, and away we go. I do just about no editing on any of these. I don't have any storyboards I read from. There's no teleprompter here. I talk to you and I look at the charts, and away we go. So it should be fun. So let's take a look. If you look at the S&P, what can you say? You're up another 4.99% for the month, almost a 5% gain. These are the gains you dream of. Do you think you'll get anything like that next year? That's the big question. There are studies that show the year of a presidential election, the S&P goes up about 12% on average. So you got to take everything in as to where you're at, and you got to look at all the statistics everywhere. When you take a look at where the market's at on a weekly basis, you're up 2.36%. But the big story is after the last break right into the end of October, remember my stock reports when I said, and I created it in September, I said probably an up in September, a hard down in October, a strong November, early pause, and then a rally. The only spot I was a bit wrong was the pause. I thought you'd pause more than you did, and you didn't. You gave me just a few days. I was looking for about business days, 6 to 7, right in that general range. Okay, wasn't too far off. Now, the strongest part of the Santa Claus rally is now. It's the 5 days in front of Christmas. We have now, this is the last trading day, so you're there. And then after Christmas, you still keep going that whole week. And then the first 2 days of the year, trading days. So you've got time here. The market can afford pullbacks, consolidate a little bit, and still move and finish off with a very good Christmas cheer, although I think everybody would agree. Anything in this area has been a good Christmas cheer for all involved. So that's what I'm seeing in the stock market. You can see how the markets run to the upside. Originally, I kept telling traders, and I said, you have an inverted head and shoulder formation, and people are going, what the heck is that? Well, think of this as a shoulder. another shoulder, and the head. So if you were drawing, you're drawing like that, you got the head, you come around and another shoulder. It's much better on the daily charts, and it gave you a great count. But that would take you from approximately the 4,600 range to 41. You flip the head over, you grab it and you just flip. And that could give you a 51 and a quarter number to the upside. I'm amazed at how many of the different trade houses are coming out with a 51, 5,200 next year projection. Now, you know, a lot of the firms have lifted their projections because as the market keeps moving higher right now, they're going, well, you know, you're cutting into that. Whatever, I don't care. What I do know is that every single week has been a higher week. Does that mean you're overbought? Absolutely. Does it mean you're stretched out? Absolutely. Do you have to go right up to that count now? No. A count can happen later. What you don't want to take out is this, if that count's going to have validity over time. Remember, we're dealing in a weekly chart here. Pullbacks, I see support all the way back wherever the 18-week average is. That number will go up as we reopen on Tuesday morning. Remember, you're not open Monday. You'll be open on Tuesday, and that number will climb a little. You know, your support's going to end up at a higher level than this is what I'm saying. And the Bollinger Bands, you only stay over Bollinger Bands 5% of the time. Now, you can do them in succession. It's still going to be 5% of the time. If you take a big field, you throw in the math and you look at how it does it, it's built, it's created to do that. So when you think about them, when you come up to them, you're in a natural resistance zone because of that. When traders are saying, oh, I'm just going to keep buying, this is the one where it's going to keep going, Ira, you'll hear me throughout the year go, sure. That is, how do you think they build the casinos in Vegas? With guys like that go, oh, this is the big one, it's going to go. You'll, in my opinion, have a better chance to come in the market if you're still bearish at higher prices typically than just jumping in under a Bollinger Band. I use the word typically, all right? There's always an exception, and there's always that guy that sits at that one-arm bandit and he'll hit the pot. But he's the exception. That's what I'm getting at, okay? And you don't play for that. You play, if you're going to play charts, play the norms, okay? And that's what it's about. It's being able to stay in the game, playing the norms. Don't be the outlier. For the time you get it right, how many are you going to lose because you did that? So what I would tell you if you're sitting next to me, no, you don't chase over a Bollinger Band. Let the market come to you or don't play. Hear what I just said? It will come to you in time. Are you trending? You're not. Are you over the Bollinger Band? Yeah. Are you overbought on a weekly basis? Yeah. It doesn't mean you can't keep going higher. I'm not fighting that. Haven't at all. I've been the bull here. But I'm also telling you, no, I would not be deploying new money on this rally right now. I'd wait for the good break to come in on whatever that break is. We'll judge it as it comes on. We'll be here talking to each other. Same thing in the Dow. Straight up. I mean, it's an amazing rally. If you're watching television, be it Bloomberg, be it CNBC, all they do is talk about how amazing the rally from November has been and how the market just picked up and that was it. Ended in October with the washout and kept going. Now, the NASDAQ's the one of them, and this is the tech stocks, which have been super strong. It had the one break, but it too is up now and over the Bollinger Band. And the laggard has been the Russell, and everybody's buying now. Now, I'll let them buy. I predict you'll have a better shot than buying up there in short order. Doesn't mean I'll be right. Maybe it'll run without me, okay? But if it does what Bollinger Bands have done each and every time, that is how I'll play them. If you want to learn this, you can do this yourself if you go to my website, iraepstein.com. And go up where it says education, the Bollinger Band course is there. So that's how I'd be playing it. Now, 5-year notes, up to the upper band. Bye-bye. I'll let somebody else buy it on a weekly basis there. Same in the 10-year. That doesn't mean I'm not friendly. No, it's overdone. It's going to pull back into the band at some point. Wherever that is, it's fine. I'll judge the market then. But this is not where I teach to deploy new money on the long side. And I'm the bear in the dollar. I have been pretty right in that report that I put out over a week ago. Looks pretty good. The market has done what I was saying if you viewed it. But now you're under the ban. Let the market come to you. You got a little time. I don't think we're through, anywhere near through. I'll be surprised if you don't get to the 200-day average over time here. In the euro currency, be careful. You're getting up to the 200-day average on the top side and you're overbought, and this is bullish. Remember, the dollar index weighting is 40% of the euro makes it up. So if this is going up, that's generally going down in the dollar, and they flip-flop back and forth. I try to avoid at all costs being in the dollar and the euro at the same time, because it's the same type of bet if you think about it. In the Canadian dollar, higher lows, higher highs, up to the 100-day average. Maybe you'll get to the 200, but you're already overbought. You're over the Bollinger Band. What's the theme? You're over the Bollinger Band. What's the theme? In most cases, you're overbought. End of the year. Let the market come to you where you don't need to trade right now. It's that. I own a brokerage division. I sit there and I run it, and I tell people you don't do these things. You know why? A winning client's a heck of a lot better than a losing client. Does it mean I'm right? It does not. Does it mean my logic's always going to work? It does not, all right? If I knew this would just keep running, I'd jump into. I know what the odds are. It's that after this big of a run, you get pullbacks. That's all I'm saying. Am I telling you to fight a trend? I am not. Is there a trend in the end? No. But I have been saying to you now for a month, I said, the market is doing what the marketplace did in the United States. Let me explain that. The Fed kept talking tough, but interest rates started dropping, and we saw the futures markets shooting to the upside regularly, kept coming to the upside. Higher markets and futures are lower real rates. This even went on as the Fed did the central bank's job. They kept, and they are, auctioning. And as they had to get their auctions bought, they had to offer higher rates. But the marketplace came in and said, you watch, we're going to be getting lower rates. And the market overrode all of that correctly. Well, my point is, we started seeing we had a bearish embedded reading. This is why embedded readings are so important. When you lost it, I know I was here saying to you, I think you're through on the downside. I think the market's going to do now the job that the marketplace did in the United States. It's going to lift the yen. It's doing it for them. So by the time Mr. Ueda decides that he'll get to a more normal monetary policy, the market will probably have discounted that to a large degree. In Bitcoin, what's the play now? The whole play is, and people are piling in, I've told clients to be in the market, back over here to be honest. And I said, you're not trading charts. If that's what you think you're doing, throw that concept out. You're playing the event that before January 10th, the SEC is going to release and approve a host, I don't know how many, ETF funds based on spot, not futures contracts, that will then give the asset managers, could be the banks, it could be money market funds, another vehicle that they will consider for their clients going into, so people think it will open the doors and go there. The problem is everybody's doing it already. I'm not saying it can't happen, but often there's that rumor. Buy the rumor, sell the fact, or buy the... Got it? You understand what I'm getting at. In the WTI crude, keeps climbing higher because they don't have any resolution at all in the Red Sea. It's a problem. And the problem isn't in WTI oil, which we keep producing. The CapEx for next year, according to what I've seen on Bloomberg, are going to be a reduction in the shale areas, about 4% from the big boys. And now you'll say, well, why are they cutting production? I didn't say they were cutting production. They're cutting CapEx. They've got this technology down so good that you can spend less money and get more out of a well today. And it's how they drill it. It's what they put in it. All the technology's gotten better and better, and we've become one of, if not the world's largest producer right now of crude oil. You saw that we also saw a breakaway from OPEC by Angola leaving them. Is Nigeria considering it? It's up in the air. They're not happy with the caps they got. It's very possible. So you got to keep your eye on all that's going on there. When you look at the Brent, you got to bounce. Where did it come from? Two elements. First challenge of the 200-day average in the Bollinger Band. Today, I finished my 200-day recording of my chapter for my new charting course. And I really cover this in detail, the 200-day. I've done every moving average very different than I've done them the last time I did the courses. I think the last course I did could have been 8-9 years ago for the full charting course, if not longer. So this is a complete revision of it. I think you'll love it. But here's that Bollinger Band. If you're selling under it again, I think you'll be able to come in at a better price. Same here in WTI, and you're oversold in the market. Heating oil finally got to the Bollinger Band, hit it, and I think professional money comes out. It didn't quite make it to the 200-day average. So you put it all together, you get game plans, and you execute. Mine is to tell you, Merry Christmas. I enjoyed being with you this whole year. I will be here next week doing all the videos again for you. You have a great time with your family. Hope you give us a thumbs up, and I'll catch you all Tuesday. Take care.